Today, we are digging into an absolutely massive financial showdown. We're talking about a high-stakes, multi-billion-dollar bet involving the world's biggest music company, Universal Music Group. The man behind it all is billionaire investor Bill Ackman, and his plan could totally rewrite the playbook for activist investing. So let's just start with the number, because it's staggering. $64.4 billion. That is the bid that Bill Ackman's firm Pershing Square has put on the table. And let's be clear, this isn't just about buying up some shares. This is a full-blown proposal to acquire all of Universal Music Group. So what's the actual plan here? What's the end game? Well, it's kind of like a three-step move. Step 1, buy Universal Music. Step 2, pack up its corporate headquarters and move it from Amsterdam all the way to Nevada. And step 3, the grand finale, list the company on the New York Stock Exchange. The goal is to take this absolute giant of the music world and plant it right in the heart of the American financial markets. Now, this offer was officially put on the table on April 7th, 2026. And when you look at the details, you really start to see just how serious this is. So let's break it down. First thing you have to look at is the premium. Pershing Square is offering a jaw-dropping 78% more than what UMG's stock was trading at just a few days earlier. I mean, that's a massive incentive for shareholders to pay attention. The deal itself is a mix. You get some cash in your pocket, and you get stock in the new American-listed company. And just to show they're not messing around, Ackman has made it clear all the financing is completely backstopped, which basically tells UMG's board, the money is there, it's ready to go. But why? Why offer such a huge premium? And that really gets us to the heart of the whole strategy, what this is all about. It's Ackman's big valuation play. He is betting that the company is worth way, way more than its current price tag. And this is the perfect analogy for it. Think of UMG with its incredible artists and music catalog as a blockbuster movie. But right now, that movie is only being shown in a tiny little art house cinema, which is the Amsterdam Stock Exchange. It just can't attract a big enough audience of investors. So Ackman's plan is to move that same blockbuster movie to a Times Square multiplex, the New York Stock Exchange, where he's convinced it will finally get the blockbuster valuation it deserves. Okay, so let's put some numbers to that analogy. Right now, in Amsterdam, Pershing Square figures UMG is trading at around 16 times its earnings. But by moving it to New York, it suddenly becomes eligible for huge indexes like the S&P 500. It gets access to a much, much bigger pool of US investors, and they believe the market there will value it closer to 25 times earnings. You do the math on that difference, it could unlock tens of billions of dollars in value for shareholders. So why is the company's stock being held back in the first place? Well, Pershing Square did their homework, and they identified a few key issues. There's some uncertainty around one of its major shareholders, the Bolloré Group. There was a plan for a US listing that got postponed. And there's this general feeling that the company just isn't using its financial power as aggressively as it could be. It's all these little things that, in Ackman's eyes, have created this massive opportunity. And that brings us to what they want to build, the blueprint for the new UMG. This isn't just about changing where the stock trades. It's also about a serious refresh of the company's leadership and how it's governed. The plan calls for a pretty big shakeup at the board level. The headliner here is bringing in Michael Ovitz as the new chairman. I mean, this guy is a legend, a Hollywood super agent who's represented icons like Madonna and Michael Jackson. You can't get much more entertainment industry firepower than that. On top of that, Pershing Square would take 2 seats on the board themselves. But, and this is a really crucial point, this is not about fixing the day-to-day business. Ackman has been super clear that Sir Lucian Grange, the CEO who built UMG into the powerhouse it is today, would absolutely stay in his job. That's a huge signal that the problem isn't the music or the artists, it's the financial structure wrapped around them.
Of course, a plan this big is going to face some major hurdles. And the biggest one isn't regulators, it's not the financing. It all comes down to simple math. It's going to be a shareholder showdown.
For this deal to actually happen, it needs a 2/3 majority of UMG's shareholders to vote yes. That is a really, really high bar to clear. It makes every single major shareholder incredibly powerful. And this chart? Well, this chart tells the whole story. See that big orange slice? That's the Bolloré Group, a French conglomerate that controls a whopping 28% of the company. Pershing Square has 10%. Even if every single other shareholder on the planet voted yes, you still wouldn't get to that 2/3 threshold of 66.7%. The math is brutally simple. Without the Bolloré Group's blessing, this deal is dead on arrival. So did Ackman get their support? Well, he said his very first phone call after launching this whole thing was to the Bolloré Group. And when he was asked to describe their reaction, he said it was music to my ears. You can't really send a clearer, more confident signal than that. He believes he has secured the single most important vote he needs to win.
Now, if we zoom out a bit, what's happening here is way more than just a deal for one music company. You could really be looking at a whole new investor playbook, one that might just define the next era of high finance activism.
And the strategy really boils down to this one key idea: structural underperformance. The idea is to find a fantastic company that's being undervalued, not because it's run badly, but because of these external things, like where its stock is listed or how it manages its money. The activist's job then isn't to fix the business, it's to fix the structure around it. At the end of the day, Ackman's entire bid is really just a giant arbitrage play. He's not saying UMG is broken. He's saying it's a world-class asset that's stuck in the wrong marketplace. And he's put together this incredibly complex, multi-billion-dollar deal for one simple reason: to move it. And that leaves us with a really fascinating question to chew on. Instead of all the messy public boardroom fights we're used to seeing, is this the future? Will the next generation of activists focus on these massive structural plays? Is the new frontier of corporate rating really just about moving a company from one stock exchange to another? It's a $64 billion question. And this deal? Well, this could be the first big answer.